Hi, everyone. Thanks so much for being here. We will get started here in about just a minute or so. Just letting everybody else jump in. Okay, we're going to go ahead and get started. Well, good afternoon, everyone, and welcome to Sales Tax Basics. I'm Cindy Nellis, Director of the Penn West University Clarion Small Business Development Center, and we are happy you have decided to join us today. As many of you are getting your businesses set up and ready to go, we want to make sure that you have the basic knowledge of Pennsylvania sales tax. Your questions may be who needs to be registered to collect, what items are taxable, when does sales tax need to be charged, where do you file and pay, and what should I do to keep proper records? Well, today we will answer those questions and more, as well as learn about sales tax exemptions, use tax, and resources to help you every step of the way as your business grows. The Pennsylvania Small Business Development Center, we have established a partnership with the Pennsylvania Department of Revenue to deliver a monthly webinar that provides key information for you, our small business owners. We have 4 webinars, each offered every 4 months. And we are offering today Sales Tax Basics, but as you can see, the other webinars are getting started with MyPath, Pennsylvania Taxes for New Businesses, and Withholding Basics. So next month, we'll be back with Withholding Basics, and we'll start the series back over in January. The flyers that you see will be emailed to you after today's event. A few reminders before we start. You will be receiving the presentation slides, a link to the recording of the webinar, those tax flyers that you just saw, and as well as any other information that we gather after today. If you have questions, we're here to address them. We ask that you submit your questions using the Q&A icon at the bottom of the screen. If you have questions for me, your host, I just ask that you enter those in the chat box. However, there may be situations where our presenters are asking you to answer questions, kind of get some feedback and dialogue going. That we'll be using the chat box as well. Before we get started and I turn it over to our team of experts at the Department of Revenue, I want to give you just a brief overview of the Pennsylvania Small Business Development Center. We are a grant funding program with the mission to help businesses start, grow, and succeed. We are here to provide education, information, and tools to help you make better business decisions. We do this primarily through our one-on-one business consulting services that are free, no cost, and confidential, as well as our training seminars, which cover a variety of topics on things that, or topics that addresses the needs of our small businesses. The Small Business Development Center is here for any kind of small business, which we generally define as a business with less than 500 employees. We also use our funding to provide you access to information from databases that we purchase and we access for you. Those databases are typically used for conducting industry and market research, implementing marketing strategies, and completing financial analysis. And I would direct you to paspdc.org to get a nice comprehensive list of all the different training events that all of our centers offer. Our Pennsylvania network is made up of 15 centers, all hosted by institutions of higher education. Take a look at your county and the SBDC that covers that county. But there's no wrong door. So if you connect with me, which I'll be giving you my contact information, I'll make sure that you get connected with the SBDC in your neighborhood. Okay. So if you aren't a client of the Small Business Development Center, we would encourage you to become one. All you need to do is connect with us, complete a request for consulting, and we will get you partnered up with a consultant like myself to take the next steps and maybe finding resources that you need, getting answers to questions that you have, or getting started with a business plan or financial analysis proposal that is needed. Okay, with that, I would like to turn it over to Stephanie Schreck. Stephanie has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center. She started her career as a phone representative with the Customer Experience Center back in 2019. Through the years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So with that, Stephanie, I will stop sharing and I will turn it over to you.
Thank you so much. All right, so let me share my screen here. And then we will get started. So hello and welcome to the new business series presented by the Pennsylvania Department of Revenue. Again, my name is Stephanie Schreck, and I am a research analyst with the core division for the Customer Experience Center. So first, I would like to start off by thanking all of you today for joining us and for wanting to learn more about how to properly collect and remit Pennsylvania sales tax. So one thing we do want to emphasize is our presentation series. The cost of non-compliance far outweighs the cost of compliance. Okay, so today we are going to cover a wide range of information relating to sales tax and the nuances that go into it. We will be defining what exactly is sales tax according to the Commonwealth of Pennsylvania and how local sales tax is applied. So with that, we will talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We will also clarify who must collect PA sales tax, as well as what qualifies as nexus. We will also go over how to register for a license, how to calculate the amount of sales tax to collect, as well as how to report and pay to the Commonwealth. So we will quickly go over exemptions and who or what they apply to. We are also going to highlight use tax and when it needs to be paid. And then finally, we will wrap up this module by going over what resources are available to help you should you have any questions or need further assistance. All right, so what is sales tax? Sales tax is a 6% tax on the sale within the Commonwealth of tangible personal property, services to tangible personal property, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. So if you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If a business sells or delivers an item to an out-of-state location, then this sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on the map, Allegheny County shows a 7% and Philadelphia shows 8%. This is because of a local sales tax. During the 1990s, Pennsylvania legislature passed a new law imposing a local sales and use tax on certain counties. It was a tax imposed in addition to state sales tax in Allegheny and County in the city of Philadelphia. So the rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs of those jurisdictions. The rules are the same, except that the local tax, is based on the place of sale, not delivery. So for instance, if I buy a meal in Philadelphia, I will be charged a total of 8% state and local sales tax on the meal. If I live in Montgomery County and order furniture from a Philadelphia store, the additional 2% local sales tax will still be added based on the location of the store where I made the purchase. So now that you're a little bit more familiar with what exactly sales tax is, let's review the individual taxable components. So tangible typically means something material or physical. So tangible personal property is generally a physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered tangible property, such as electronically delivered software. This distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. So these are some of the taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a little less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kind of items constitute tangible personal property. You can see how wide-ranging these items are. So if you buy any of these or similar items in Pennsylvania or have them delivered into Pennsylvania, they are taxable tangible personal property. And we do have a more complete listing available in the REV 717. All right, so with the passage of Act 84 in 2016, certain digital products are now included in the definition of tangible personal property. These products include videos, photographs, books, or any otherwise taxable printed matters, applications, games, music, and other audio canned software, including support, and any otherwise taxable tangible personal property. So these items purchased and are used in Pennsylvania are taxable whether electronically or digitally delivered, streamed or accessed, or whether purchased individually or through a subscription. And again, this also includes any maintenance or updates. Okay. There are certain items of which sales tax is excluded per the state law. The exclusions include the following: wrapping materials that are used to deliver property, such as like bubble wrap, pallets, shrink wrap, and so on. So anything wrapped within the package or used to deliver the package is considered exempt. Grocery store food, unless it is considered ready to eat food, such as a sandwich from a deli. Clothing that is considered everyday wear. So everyday wear items are articles of clothing that are not required as a condition of your employment, like a uniform, and are considered to be your regular clothes. So these everyday wear items are not subject to tax. Caskets that funeral directors use in conjunction with funeral services are exempt from both sales and use tax. Regular unfiltered water, including mineral waters, are also exempt. And then we have sales for resale. This is a big one for many businesses, industries like department stores, grocery stores, or like automobile dealers are in the business of buying goods and reselling the same goods. So in Pennsylvania, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge the tax to your end customer. All right, so sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs service is taxable, then that service itself is also taxable. For an example is if my watch breaks and I take it to a jeweler to have it repaired, that transaction is subject to sales tax. Since watches are subject to sales tax, or AKA taxable, then the repair service needed to fix my watch is also subject to sales tax. So on this slide shows some other examples of services that are taxable, which may help you better understand this concept. So please do take note of the first item. We do have wrapping or packaging tangible personal property. So I know I just used wrapping materials as an example for an exempt item. This is considered taxable because we are not mentioning it being used by the seller to wrap or package items incidentally to deliver. So the example in this slide is referring to services of wrapping tangible personal property like gift wrapping. All right, so enumerated services are those services specifically taxed. These are not tied to tangible personal property, but are specifically identified for taxation by legislation. These can get very involved, and some have special rules on how to determine its taxability. All of these items are specifically outlined in the REV 717 that I mentioned earlier. We do recommend you check that out if you are providing any of these services. Okay, so now you know what sales tax is and some examples of items and services where sales tax is applicable. So let's dive into who should be collecting Pennsylvania sales tax. So the Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. So in other words, the law requires Pennsylvania businesses to collect the tax from the customer at the time of the sale. What it means to maintain a place of business has changed over the last several years. So for an entity to have a physical presence, it means exactly that. To fall under this category, a business must have taxable sales and has some type of physical location, like an office or a place of business, or even an employee. This can include a representative or an independent contractor, storing inventory, or renting or leasing properties or tangible goods. And then, of course, they make deliveries to a Pennsylvania address. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you. For the majority of you attending today, will have a physical presence in Pennsylvania. So let's just quickly visit bullet point 3 here. Goods are inventory in a warehouse. So under Pennsylvania law, inventory stored in a warehouse, a fulfillment center, or any location within Pennsylvania will create a physical presence with the Commonwealth. So this means that retailers who have inventory stored within Pennsylvania are required to collect and remit Pennsylvania sales tax on any sale made by the retailer directly to Pennsylvania customers. We are highlighting this one because many people who sell online are not aware of this. Even if you sell through a marketplace facilitator and the goods are stored in one of their warehouses, but the end customer is a Pennsylvania resident, you have a physical presence in the state. So let's, speaking of one-line sales, this is a perfect way to transition to what's called economic presence. So Even though an entity might not have a physical presence in Pennsylvania, they might have what's called an economic presence. So the Tax Reform Code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth, which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. So this statement is referring to economic presence. So again, if a business makes $100,000 or more in an annual Pennsylvania gross sales, then that business would be considered to have an economic presence, and they must collect and remit Pennsylvania sales tax. So back in 2018, the Wayfair versus the South Dakota decision opened the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as the state had a uniform tax rate, did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is acceptable standard in making businesses collect sales tax. So this was an effort to level the playing field for all businesses. So basically we are talking about here is an out-of-state business that sells to Pennsylvania customers, establishing consistency in the requirements to collect remit sales tax. So previously, when nexus was determined solely by physical presence, these businesses would have a huge advantage over Pennsylvania brick and mortar locations because they were not held responsible for the collection and remittance. With the new law, out-of-state businesses are now treated similarly to Pennsylvania business locations if they make over $100,000 in gross sales within Pennsylvania annually. I know I used the word nexus a lot, so let's just quickly dive into what that means. So nexus is when a business has either a physical presence or an economic presence within Pennsylvania. Sales tax nexus is just a fancy way of saying a significant presence in the state. So a business is considered to have nexus in Pennsylvania by having either physical or economic presence. And then they must, of course, collect sales tax on all taxable sales to Pennsylvania customers. State sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well. The main difference between these states and what was just covered for Pennsylvania will come down to the threshold for economic nexus. Some states have a dollar threshold similar to Pennsylvania, although the dollar threshold can vary. Some states also have a number of transactions or a dollar threshold, such as like 200 transactions or the 100,000. To round it out, some states have a number transaction or dollar threshold. Again, such as 200 transactions or 500,000 to establish economic nexus. Unfortunately, we cannot provide information concerning the administration of other states' tax. There are resources available online to help you determine if you might have a filing requirement in another state. So the next area we will talk about is exemptions. So unlike exclusions, there are usually items never subject to sales tax. An exemption is situational and dependent on who purchases the item and then how the item is used. So Pennsylvania law allows businesses to claim exemptions from sales tax for several different reasons. The exemptions are centered on certain business processes and their taxability depending on who bought the item and how it is used. To claim an exemption from sales tax, you must complete the REV 1220 and disclose a valid basis for the exemption. Please keep in mind the purchase must be considered with the exemption reason being claimed. This form must be filled out to its completion. You must select if the exemption is to be used one or multiple transactions, fill in the name and address for both the seller and purchaser, and select an exemption being claimed. Additionally, the burden of proof falls on the shoulders of the person claiming this exemption. You must supply supporting documentation when appropriate to support your claim. If the form is missing any of this information or the purchaser's signature, the seller has the right to reject it and charge tax, as it would be considered incomplete. All right, so let's go over some reasons you may claim an exemption. The first reason you may claim an exemption is if you are exempt entity such as a government organization or a qualified nonprofit. Items purchased by state and federal agencies, as well as PA school districts, are exempt from sales tax in most cases. Catholic and private schools will receive a 76 number to claim an exemption. Regarding construction contracts, the exemption is limited to building machinery and equipment, not the governmental organization. For nonprofit organizations or institutes of purely public charities, there is a limited exemption on purchases. An example of institutions of purely public charities include not-for-profit hospitals, volunteer fire companies, and churches. These organizations that qualify under this category are given a 75 sales tax number by the department. When we say limited exemptions, we mean that there are certain requirements that must be met to consider the purchase exempt. The items and services purchased by these entities must be directly used in their charitable purchases. For example, let's say a church purchases a lawnmower used for maintenance of their property. They will need to pay sales tax on this purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from funds of the exempt organization. Please note that if you have 501c3 status with the IRS, you do not automatically qualify for this exemption. You must file an application, which is the REV 72, with the department to determine your state exemption eligibility. If you are a business operating in a Keystone Opportunity Zone or a strategic improvement zone or a similarly designed state economic zone, you are given a sales tax exemption on goods and services used exclusively in that zone. Purchases made for items and services used by the business outside of these areas will need to include sales tax. Businesses qualifying for this exemption receive a 72 number from the Department of Community and Economic Development. All right, so you will want to consider how the item is being used. If an item is being used directly and predominantly by the business in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominantly used means that the item is used directly in the exempt business process over 50% of the time. So for example, a manufacturing entity purchased a forklift that is used in pre-production activities, production activities, and post-production activities. So for the forklift to be exempt from sales tax, it needs to be used over 50% of the time in the production activities. If it is used more than 50% of the time in the activities that are not considered a part of the actual manufacturing process, then there would be no exemption. Finally, if you are buying goods and services for resale, you can complete the REV 1220 to receive an exemption on the items upon your initial purchase, since you will be collecting the tax from your customer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purpose of resale. If you are deemed a retailer or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So when a seller does not charge PA sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, then it becomes the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. So as we just stated, use tax is sales tax not collected by the vendor or seller at the time of purchase and is the responsibility of the customer. Examples of when use tax is due is if your business makes a purchase of a taxable item over the internet or through toll-free numbers or even mail order catalogs from an out-of-state location that is not charging PA sales tax. You as the purchaser located in Pennsylvania must necessarily make a payment to cover the amount of sales tax that should have been included in your total at the time of purchase. This is the purpose of use tax. The tax rate is the same as sales tax, 6%. State plus 1% local tax for items purchased and delivered to and used in Allegheny, or a 2% local tax in Philadelphia. Many businesses believe they save money by making tax-free purchases from an out-of-state vendor, unaware that these transactions are often assessed upon audit by the department. Since assessments include interest and penalties on top of the tax, businesses in these situations have an increased operational cost by not voluntarily addressing use tax obligations. So we've discussed who needs to collect sales tax. Let's go over about registering for a sales tax license. So in order to collect sales tax, you must have a license issued by the Pennsylvania Department of Revenue. The license performs many functions, including demonstrating to the public that the business is duly full licensed agent to collect state sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means 30 days within collecting it. To register and obtain a license, you do need to complete the PA online business tax registration application. If you have no pre-existing business tax accounts, you can use the business registration hyperlink right from the MyPath homepage without logging into a profile. If you have any pre-existing accounts, you simply need to add sales tax. You should log into your profile and use the business registration hyperlink. The reason for this is that going through your logged in profile, you won't need to refill in your business information for the application. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business. It belongs to the Commonwealth. It must be handled accordingly to the law and to the department's regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure the success of the business by avoiding costly penalties. So if you are an entirely new business to Pennsylvania, we do recommend that you visit www.business.pa.gov for all of your registration needs. This is a one-stop shop website, was established to help new businesses get up and running beyond just setting up their tax accounts. So now that you've signed up for your sales tax license and are ready to make some sales, you need to know how to collect and remit the tax to the department. So of course, the first step is collecting sales tax, is knowing the amount that needs to be collected. As previously mentioned, sales tax is 6% of the total purchase price, including warranties, which represent the prepaid taxable service to a taxable tangible personal property, delivery and other services. An example of another type of a service that would be included in the purchase price would be the charge for car detailing, included with the purchase of an automobile. So when it comes to deductions, the basic rule is any cost of a business incurs in selling a taxable good or service when passed on to the purchaser is considered to be a part of the taxable purchase. So if you take a look at your phone bill, may list an item called a universal service. This is a charge that telecommunications providers may add to your bill to recover their cost of federally mandated contributions to a universal fund. It is the cost of doing business for them, and they may elect whether to bill their customers for this. Amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts such as buy one, get one free, wholesalers or trade discounts, or even store manufacturer coupons shall establish a new purchase price if both the item and the coupon are described on the invoice or cash register receipt. A recent court case, Myers versus the Commonwealth, affected how general discounts are handled. The court found the regulation did not require the coupon related to a particular taxable item in order to reduce the purchase. Only the item and coupon be described on the receipt or invoice. As the court noted, if all items on the receipt, invoice or receipt are subject to tax, then it is reasonable to determine the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all items are not taxable and the coupon do not identify to a taxable item, the description is inadequate and the amount of the coupon cannot reduce the purchase price. So simply, in order to reduce the taxable purchase price, the receipt must identify the product the discount applies to, or all items on the receipt must be taxable. Sales tax returns and payments must be filed electronically. There are 3 methods in which you can do this: online, over the phone, or using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued for from both our PATH system and our retired eTide system. You can request statement of accounts that are available immediately after submitting your request. You can also send messages directly to the department and more. Another very important function is that you can grant permission to others like your CPA or even a bookkeeper to also view information regarding your returns. You can access the MyPath portal at www.mypath.pa.gov or simply visit the revenue.pa.gov and click the icon that says MyPath. All right, and you must create an account to use this service. The department has third parties, vendors who will provide some e-filing software for those taxpayers who do not wish to use the department's MyPath system. A list of approved software vendors is available on the department's website. Again, the department's website is revenue.pa.gov. So some important things to remember is a PA3 forms are not available for download from the internet. And the use of other tax forms could result in a non-filer notification and or the misapplication of a tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through an electronic funds transfer. This is also known as an EFT. Failure to comply with the EFT remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, but not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So if every quarter you send in a check for over $1,000, you are going to get hit with an EFT penalty for every quarter. When you sign up, when you initially register, for a sales tax license, your filing frequency will automatically be set as quarterly. Near the end of every year, the department reviews the average of the current year, first and second quarter sales, as well as the prior year's third and fourth quarter sales to determine if the filing frequency needs to be adjusted. Semi-annual filers are those who have an actual tax liability of $300 or less annually. Semi-annual returns are due August 20th for the January through June period and February 20th for the July through December period. Quarterly filers are those with an actual tax liability less than $600 per quarter, but greater than $300 annually. Quarterly returns are due the 20th day of the month following the end of each calendar quarter. So that would mean April, July, October, and January 20th. Monthly filers, those who have an actual tax liability that is less than $25,000 but greater than $600 per quarter. Monthly returns are due the 20th day of the month following the end of each calendar month. I know this is a lot of information being thrown at you, but thankfully the department puts out a yearly due date calendar called the REV 819, which is broken down by frequency to help you remember when your filing due dates are. And you can find this form on the department's website. If you have an actual tax liability of $25,000 or more per quarter, you may be required to remit what we call an accelerated sales tax prepayments. These are basically advanced tax payments made for those who have a high tax liability for the year. We will have more information available on accelerated sales tax prepayments in the future, but we have found that typically this is not something a new business needs to be concerned about right away. The Department of Revenue does offer a vendor discount for timely filed returns and payments. This discount is limited to a flat rate, depending on your filing frequency, or 1% of the tax collected, whichever is the lesser of the two. If you collect sales tax on an item that you previously paid sales tax on, you can claim a credit for the sales tax paid when you originally purchased the item. All right. Businesses who are registered for sales tax may remit use tax as part of their sales tax return. If you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the MyPass system, which we discussed earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the home page, which is the non-logged in function. Individuals or sole practitionerships may also use line 25 of their PA 40 to pay use tax. So let's recap some general rules that we went over. The filing remittance occurs at different intervals determined by the department. You can either be monthly, quarterly, or semi-annual filers, depending on the size and the size or the sales volume of your business. First-time filers will always be set up as quarterly until the department has a chance to review the activities to determine if it needs adjusted. Due dates will be the 20th of the month following the last day of the reporting period. Again, Form REV 819 is available on our website. Is there to help you remember when your due dates are based on your filing frequency. Local and state sales tax are filed together on one report. One thing that a lot of people are not aware of, but is very important, is that even if you have no sales for a certain period, you are still required to file a zero return. Think of it as an informational return, letting the department know that you had no sales for that period. You must do this in order to stay compliant with the department. No discount is granted to returns filed late. Penalty and interest will be added to late filings as well as late payments. Interest for any late payment of tax, interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The annual daily interest rate varies by year, so you will want to use the REV 1611 to find out more information regarding how this is calculated. Penalties. The penalty for past due filing of sales tax is 5% per month from the due date until the date filed, but it to not exceed 25%. If an underpayment penalty is warranted, it is imposed at the rate of 3% a month on the unpaid tax balance from the date filed to the date paid, but not to exceed 18%. So in no case shall the addition be less than $2. So note, if the proper tax, interest, and additions are not remitted, the department will make an assessment. Sales tax is one of the most, if not the most complicated taxes for taxpayers to deal with. I know we've thrown a lot of information at you today, but an already very nuisance topic. So let's discuss some resources that you can refer to, which are available on our website. Majority of these will be the same resources that we have mentioned earlier and will serve as a reminder. All right, so I know we've mentioned this one a few times, but the REV 717, which is the retailer's information booklet, is a great guide to determine goods and services subject to sales tax. It also provides some information on some of the other topics we discussed here today, as well as petitions for assessments, construction contracts, motor vehicle lease tax rates, and more. We do have the REV 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all basics for for new business owners. This guide includes information for sales tax as well as registration, employer withholding, other items that going into owning and operating a compliant Pennsylvania business. The REV 819, which we have talked about, discusses due dates. It is put out each year that breaks down the different filing and payment due dates based again on filing frequency. The REV 1611 is the form used to calculate the interest on all taxes due after January 1st, 1982. Again, interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate is for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. We do strongly encourage our customers to use our online customer service center. To do this, you would visit the URL on the screen and click customer service. And here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or just general website resources, you do have an option to submit a question to the department. This feature, again, will allow users to submit a general taxability question or a more pointed question regarding a specific scenario to a trained representative that specializes in the tax. We will review the submission and respond usually within 72 business hours in a process that is similar to receiving an email. At least we forget the Customer Experience Center call center. Here you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. And then we also have the voluntary disclosure program. This provides an opportunity for businesses and individuals who have recently become aware of their Pennsylvania tax obligations. This will voluntarily come forward. In return for coming forward voluntarily, filing their returns, clearing their tax debts, taxpayers are only responsible for the payment of tax and interest. Most penalties for most taxes administered by the Department of Revenue would be waived when the requirements of the voluntary disclosure agreement have been completed. In addition, taxpayers are only responsible for satisfying tax liabilities for up to 3 years plus the current, unless sales tax was collected from customers and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit those taxes may be eligible for this voluntary disclosure program. However, such taxpayers must remit taxes for all years collected. They will not receive a limited look back. Penalties would be waived for all years. If the taxpayer is currently registered or was previously registered with the Department of Revenue, they are not eligible for the voluntary disclosure program. Taxpayers who the department has contacted or pursued collection actions against or investigated are also not eligible to participate in the program. Taxpayers interested in participating should send an email to the account listed on the screen to request a case number. This email should include all contact information for the person requesting the case. Taxpayers pursuing a PDA should not register on their own for taxes for which they are coming forward. The voluntary disclosure office will register the taxpayer at the appropriate time. So if you are registered and are not currently charging tax correctly, you should correct this issue ASAP, as audits generally go back 3 calendar years and you could be assessed the tax that was due plus interest and penalties. So that wraps up our module for the day. Hopefully this was informative and helpful. And thank you very much for your time. That is all.
Thanks, Stephanie. I'm going to launch a poll real quick, just a 1-question poll for everyone. And I do see that there's still a few questions quite a few questions that are still in the Q&A to be answered. I guess I would say that if you or any of your team members would want to address the questions, live, that would be great, or we'll just hang on and allow them to answer those questions. It doesn't matter. But I do appreciate everyone being here. And just as a reminder, we will be sending the recording, the slides after today's, probably later today, till I get the recording finalized. And I am going to actually end the recording